Hi everyone, it is Sunday the 10th of May 2020 and having a look at the global indices. So a couple of things that are worthwhile taking into account, or at least that I often remind myself, is first of all that I'm always looking at the weaker ones. So in a period where I'm looking for clues as to whether the market is kind of unclear about where it wants to go. If I then look at some of the non-US indices, which historically are generally the most bullish, if I look, for example, at say the Hang Seng or the Australia ASX or the Nikkei or the FTSE, which can be bearish even while the US is bullish. If I find that these are bullish ahead of the US opening, that is usually to me an indication that it's going to be bullish. So in other words, if the weaker indices are bullish, that is an indicator, especially like quite bullish, that's usually a clue that the market is actually, that at least the indices are stronger than they appear to be. And that was certainly the case this last week. The FTSE followed through by starting to climb higher. So I spoke last week about looking for a break of the daily trend, even though we had a weekly bearish candle. And so actually the market continued to climb. So looking at the Dow here, we are still within this range. As far as I'm concerned, we are still stuck within this weekly range. And therefore, I'm not I'm out of the woods yet with regards to this, but the market undoubtedly climbed higher. It is still technically in an uptrend. It did produce a higher low from the moving averages. Looking at the FTSE, which was, the NASDAQ, I beg your pardon, which was the most bullish of the bunch, that actually broke outside of that. All right, so that actually broke outside of that bearish candle, completely disregarded it. Nice and bullish, very strong trend. So there were some good opportunities there on intraday opportunities, and the market produced that swing low from the moving averages. Then looking at the S&P 500, so this is produced that swing low, pushed up as well, also has not broken outside of that. So currently the NASDAQ, which is the most bullish, has broken outside of that range. Looking at the FANGs, they've also disregarded that as well. So, and then moving on to the Russell as well, produced actually a high low, and from a swing low as well as a high low within the week. Still not outside of that range. I still want to see us get past that, really, because we're still approaching resistance levels, and until we get past those, I'm not really relaxed enough to feel that we are effectively back to normal just at this point. It's just exercising a little bit of extra caution there, and the FTSE also managed to push higher. So this is really what my approach is going to be for the coming weeks. A lot of these are still within that range, and my approach, strangely enough, is still going to be very much the same as it was last week. I'm prepared for breaks of the low should it happen, because it can usually happen relatively quickly. It could happen within a single day. If that is the case, I'm just prepared for that opportunity. Excuse me. And actually what I'm looking for will predominantly be a break outside of this weekly range, which includes going back to the week of the middle of April here. So it'll be the previous 3 candles. In fact, including this last week, it'll be 4 candles. Okay, so I'm looking for the top and the bottom of those, especially on the US indices. At the same time, I'm leaning towards opportunities to the upside on the lower time frame. So that means that if I go, for example, to say the Wall Street, and I do have a look at this on, say, the 3 hour, for example, there's still some good opportunities here, even going down to as far as 30 minutes, for example, there'll be some potential uptrends. So all this really means for me is being obviously exercising caution with regards to trailing my stop losses, potentially not going too low or taking profits and exiting those positions. So really just means being prepared for a quick drop and making sure that if that is the case, that I don't take it personally, because the markets are potentially still volatile. Clearly, in isolation, if we ignore what happened during February and March, in isolation, the market is bullish. If we completely ignore that, if we take it into account, there is still the possibility of an aftershock. And if as far as we can rationally understand it, the markets have not necessarily gone back to the way they are. But again, if the markets behave the way we thought they should, then everybody would be kind of more successful, make much more money doing this, and that's just not how the markets work. So right now, there's obviously some cash going around, potentially from the, let's call it QE, and so potentially that's going straight back into the market. So in other words, the massive corporations and previous investors who have access to that money or have their own cash have obviously not changed their behaviors at all. And so this is predominantly a likely indicator that the market is doing exactly what it did before we had the bigger correction. If anything, they're more incentivized to do it because there's getting everything at a discount. Buying stocks and equities at a discount is very appealing. So what it means is that as a trend trader, I'm going to trade in line with that trend, making just sure that I have my stop losses. And for me, I'll just be keeping an eye on these weekly highs and see if we do break through those. As I said, the NASDAQ has already done that. And so that's what I'll be keeping an eye on, especially as I approach those highs, because if we do fail, we end up coming back down, which is possible. We could have a down week, we have an up week, then kind of a hanging man, then a down week, and then an up week, then maybe a down week. Until we get outside of this range, I'm not going to completely relax. So it just means caution. Right now, trading in line with that daily trend, even on the lower time frames, with a lot more caution there. And keeping an eye on the previous swing lows that I spoke about, and really the previous swing low that I spoke about, which goes back to about the 22nd of April, is really, generally speaking, the bottom of that weekly range. So those are the key levels that I'm watching in either case. But as I said, not shorting the markets until I actually see a break of that, and then I'm looking for shorting opportunities after that point. So this is about really watching either if I am going to trade, I'm going to trade in line with the existing trend, and I'm not going to take it personally should the market conditions suddenly change as I approach these key levels.